Bitcoin gets rejected at 89K again. Is the year going to end below 90K, or do we still have a chance to go back up? Let's find out. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now it's about 12 p.m. Eastern time, and the price of Bitcoin is currently at 87,630. And before I do my top-down analysis, I want to go over this winning trade. Yesterday I left you guys with a falling wedge that could have broken us out to the top of this range pretty much at 89,384. I also had a possible cup and handle that could have broken us out to about 90,250, and the falling wedge is the one that pretty much played out. We got as high as 89,200, 89,300, so this is a winning trade. And the cup and handle did break out. We didn't hit the whole measured move, but I would still consider this a winning trade. I gave this trade at about 88,200. We made it to 89,200. That's $1,000 win. Congratulations whoever won this trade. This is a big win for the Flex Candle community. Now starting off here with the 12-month chart, this candle closes in 7 hours and 2 minutes, and unfortunately I think we are going to be closing a red candle. I was hoping that maybe we could close above 93k, but that's why hoping doesn't mean anything. You have to read the charts if you want to flex the moves, and if we close like this, we're going to have tweezer tops, and this possibly means more downside. This makes sense with the 6-month chart. With the RSI being toppy, it looks like we're rolling over. We take a look at the 3-month chart. The stochastics are toppy. RSI is also rolling over. We're far away from this 21 moving average, which is at 53,558. 2-month chart, you can see we double topped here in the stochastics RSI. We're rolling over, also far away from the 21 moving average. On the 1-month chart, this closes also in 7 hours. All I'm really looking for is to stay above this 21 moving average at 87,577. If we could do that, maybe this hidden bullish divergence will play out. From here to here, you can see it kind of slopes up. From here to here, and the RSI slopes down. That's hidden bullish divergence. If we lose this 21 moving average, I would have to expect a more downside. Even though, you know, there are certain things, like if you guys saw yesterday's episode 250, I went over how it's possible that we could have a bullish January, but again, that doesn't mean that after that we can't continue to fall down. On the 3-week chart, this candle closes in 4 days and 8 hours on Sunday. We're below the 21 moving average. I would like us to get back above this. If not, we could start heading down towards this 50 moving average. 2-week chart also closes on Sunday. We're right on top of this 50 moving average at 86,752. If we lose that, we're going to head down towards this 80 moving average, and that's at 65,528. On the weekly chart, we're right above the 100 moving average. That's at 86,022. We do not want to lose that. If we lose that, we're going to start heading towards this 200 moving average. That's currently at 57,000. And I've been telling you guys how this kind of looks like we're in a bear flag, and the measure move to this is about 65,500. This is also kind of looking like a descending triangle. As you can see, all the highs are getting lower and the bottom is flat. That's a descending triangle. That's usually bearish as well, so that is not looking too good. If we take a look at the 5-day chart, so stochastics RSI look like they want to roll over. 3-day chart, this candle closes today as well, and we're once again below this 200 moving average. If we can't get above this 200 moving average, I expect more downside. The stochastics RSI is also toppy, and this 21 moving average is about to continue coming down and cross that 200 moving average downward, and that is not good. You always want to have the moving averages in order: the 21, then the 50, then the 80, then the 100, then the 200. If you're getting the 21 as the last one, that's very bearish. You can also see that this is a rounded top. This also looks like a bear flag, not looking good. 2-day chart, stochastics are toppy here. Looks like we want to roll over. We were never able to get above this 21 moving average. If this candle closes red, tweezer tops as well, and this double bottom never played out for us. On the daily chart, toppy with the stochastics RSI, you can see that the RSI is rolling over. Once again, never got above this 21 moving average, so I am expecting more downside. This is where I have the bear flag, and this does take us down to about 65k. I feel like this could play out again. January, maybe we get a reversal, like I said, back up maybe to about 95, 97, maybe even 100k, but even after then I still expect us to possibly roll over unless we could start closing candles above this 50 moving average on the weekly chart. That's the only thing that I would say brings us back up to the bull market, but it will have to be a couple of candles, like 3, 4, 5, not just one, not just two. Now we head over to the 22-hour chart. Yesterday it was looking good. It looked like we were on the way up. Now it kind of looks like they want to roll over as well. 10-hour chart, we just got toppy on the stochastics RSI. We see that we have a gigantic red engulfing candle. We lost the 21 moving average. This is also looking bearish. On the 4-hour chart, we never made it to the top of the stochastics. This started to roll over. Once again, as soon as we touch the 200 moving average, like I said, we're allergic to this yellow line. We got rejected, red engulfing candle, and then another one to lose the 21 moving average as well. So I'm also expecting more downside here. Some could say that this could be some type of a head and shoulder, left shoulder, head, right shoulder. This measured move will probably bring us back to 84. They've been trying to fake us out with these head and shoulders. There's one here, there's another one here, now another one's brewing. Let's see if that move finally plays out to about 84k. On the 1 hour chart, stochastics are starting to reset, but we are below the 21 to 200 moving average. If we could close green here, maybe we get tweezer bottoms and we can make it back up. But unless we could get back above these wicks, which is at pretty much, this one's at 89,400, I would expect more downside. And on the 15-minute chart, stochastics are reset here. We could start making a move up, but once again, we're below the 200, below the 21 moving average. Right now, today, for some reason, we're back at the same price. The volume has not been that great due to the holidays, so I'm expecting possibly sideways action. If we do fall, possibly all the way down to 85, 84. If we make a move up, maybe we could still make it above 93, close that yearly candle green, but that's kind of far away, that price, and we keep on getting rejected at 89k. So I probably expect us to close this year with a red candle. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.